In 1982, in response to a court case involving a drug trafficker who attempted to claim business expenses related to his illegal trafficking, the 280E tax code was introduced. This tax code prohibits businesses from deducting expenses related to the trafficking of Schedule 1 or 2 controlled substances from their federal taxable income. Now, you might be wondering what this has to do with the cannabis industry. Well, despite the fact that cannabis has been legalized in many states for medicinal and/or recreational use, it still remains a Schedule 1 controlled substance at the federal level. This means that cannabis businesses are unable to claim many of the standard business deductions that other industries are entitled to, such as rent, utilities, and employee salaries. In other words, they are taxed on their gross revenue rather than their net income. This is a significant financial burden for cannabis businesses, especially given the fact that they are subject to a high tax rate in many states. To put this into perspective, let's say that a cannabis dispensary generates $1 million in revenue in a year. They may have $500,000 in expenses, including rent, salaries, and other business costs. However, because of the 280E tax code, they cannot deduct these expenses from their taxable income. Instead, they would be taxed on the entire $1 million in revenue, which could result in a significant tax bill far higher than what they would pay if they could deduct their expenses. This creates a challenging business environment for cannabis companies. They are effectively paying taxes on their revenue rather than their profit, which makes it difficult for them to reinvest in their business or expand operations. As a result, many cannabis businesses are struggling to stay afloat, and some are even going out of business altogether. It's important to note that the 280E tax code doesn't just affect cannabis dispensaries or cultivators, but also businesses that provide ancillary services to the cannabis industries, such as marketing, accounting, and legal services. These businesses are also subject to the 280E tax code, which means they cannot claim deductions for expenses related to their cannabis clients. So, what issues does this tax code create? It establishes a tax burden that many cannabis businesses are struggling to bear, and it limits their ability to reinvest in their operations and expand. With more states legalizing cannabis and the industry continuing to grow, it's important that we address this issue and find a solution that supports the growth and success of cannabis businesses. Do you think the 280E tax code is necessary, or should it be revised to fit more modern-day laws? Leave us a comment below, and don't forget to hit that like and subscribe button so you're always in the know.